traders, and you're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated, as traditional, to the technical analysis of forex majors. So let's start our review from the first pair. It will be the pair, as let's say, euro and US dollar and else. So the focus remains on the February 16th higher low at 1.2974, as euro bears look to strengthen their stranglehold. The March 8th high at 1.3291 has become an intra-wave lower high, creating a downwave equality target at 1.29 and risking a deeper setback towards 1.2827 this week. On recovery above 1.3216 would suggest a return to the 1.3291 lower high is on the cards. Weekly chart of euro and US dollar trend is bearish. Next pair, intraday analysis of US dollar and Japanese yen. So corrects lower towards 81.63, although there is risk to 81.36 and before forging a base. The broader uptrend remains dominant force, and the push above Monday's 10-month high at 1.20 and the push above Monday's 10-month high at 82.65 would create room for further gains to a medium-term 1.618 Fibonacci extension target at 82.89 and 83.60 this week. Only a sustained break below 81.36 would concern US dollar bulls, exposing 80.94. And the weekly chart of US dollar and Japanese yen trend is bullish. Next pair, Great Britain pound and US dollar. So support at 1.5599 remains under pressure, as Great Britain pound bears retain control of the short term. The decline from the February 29th reaction high at 1.5991 has been upgraded following the intra-wave lower high at 1.5833, creating downside risk to 1.5539 and 1.5410 on concerted weakness. Resistance at 1.5735 and 43 limits the scope for corrective Great Britain pound gains, and only above 1.5743 would question the Great Britain pound bearish outlook. Weekly chart of Great Britain pound and US dollar trend is bearish. Next pair, US dollar and Swiss franc. Further US dollar gains are expected to 0.93 as the short-term bull wave extends into fresh 4-week highs. Last week's low at 0.9072 has become an intra-wave higher low, and while corrective US dollar weakness is kept above 0.913. Monday's high at 0.9219 is expected to be broken. This would be open 0.93 and pave the way for a wave equality target at 0.9341. Only a break below 0.9103 would undermine the US dollar bullish outlook and exposing the 0.9072 intra-wave higher low. Weekly chart of US dollar and Swiss franc trend is bullish. Next pair, let's see, will be last pair for today. It will be pair Australian dollar and US dollar. So let's see what you have here. Okay, Australian dollar and US dollar. The short-term downtrend has room to extend to 1.0454 following Monday's breach of 1.0508. However, the double top pattern on the daily chart suggests there is downside risk as deep as 1.0339, and the downwave equality target projection for the intrawave lower high at 1.0671 highlights, so 1.0322. A recovery above 1.0636 is required to question the Australian dollar bearish outlook, although only a move above 1.0671 would lift the tone, and weekly chart of Australian dollar and US dollar trend is bearish. Okay, let's repeat all trends for today. Okay, Euro and US dollar trend is bearish. US dollar and Japanese yen trend is bullish. Great Britain pounds weekly chart of US dollar and Japanese yen trend, as I said, bullish. Great Britain pounds versus US dollar trend is bearish. US dollar and Swiss franc trend is bullish. Australian dollar and US dollar trend is bearish. Yes, dear traders, that's all for today. Thanks for watching. It was me, financial analyst of Grand Capital Company, Sergey Lin. For more additional information, you can visit our website www.grandcapital.net. And thank you for attention. Goodbye and good luck.